What's going on, guys? So today's going to be the trade reviews of the first day of the week, the first trading day of the 4-day week. It's Tuesday, September 3rd right now. So one thing that I do want to talk about is the economic calendar and if we have any data on the week, right? Because typically with data, typically with like a quick, very fast type of like downside kind of move and a gap down to start off the week, what that can oftentimes resemble is if you have the data at the end of the week, they'll use that data to then accumulate the sells from the early week, right? So if it were going to happen for downside, I would lean a little bit more towards the upside to end off the week, but I don't really know if that's going to be the case just yet. That's just kind of how I look at like data sets leading into like a distribution, a early week distribution into an end of week potential accumulation. And the charts never really look that great, right? I mean, if you're looking at this chart from just the daily perspective and you're looking at what the overall kind of auction is battling over, what's the whole goal of this chart, what's the whole goal of buyers, what's the whole goal of sellers? It's to keep price beneath the progressive ranges in which they were controlling before, right? So this would be the fresh gap that they tested into, they filled it, and then they lost it. They basted it with one, two, three, four, five, six, 7 trading days, right? And a lot of people look at this like some sort of bull flag, right? And it's putting out these, this little trend line break on the daily to end off the week last week. This was all just a really nice close to end off the week as well last week, but what this is really just doing here, guys, is building out lower high by lower high by lower high by lower high. And then eventually what we're going to do is we're going to get the failure that catches a lot of people off guards. And then it's going to come back down, fill gaps, retest levels, and start. That's whenever you start really looking to evaluate what's going to happen, right? So that was my thoughts leading into this morning. So as soon as I saw the gap down, right? As soon as I saw this gap down, and then the immediate blood right off of the open, right? We start kind of like selling off. If you take a look at like the extended hours, what it was a push, actually a move higher at 4 a.m. and then they gave up everything, and then everything kind of just consolidated beneath the pre-market swing high, and then what we did was we broke right beneath the pre-market low right off the start of the day, right? So I would obviously assume that we're going for some sort of like external based low, being this one that was the previous week low. That would be my first initial target for the overall index. And that was kind of what I was looking at right off of the open. And I want to talk about like my Netflix trade, a couple other things. Let me open up this. Let me go to my Twitter and let's talk about the first initial trade that I took on the week, um, for this week, right? Because I only opened one trade today, which was a win. I actually was red today, technically, just because I didn't realize the position that I'm actually in right now. Um, but I will talk about it. So I want to talk about it because it's important. Um, okay. So, sorry, technical difficulties here, but I was very interested in the Netflix daily. Feels like the bigger picture daily failure is coming, especially with a weak afternoon. Feels like there's also a sell climax in QQQ on the overnight gap potentially happening. So there was a sell climax if you go over to QQQ. This was the overnight gap level right over here. What they did was they filled it to a T, and then what you see is like a really nice market maker buy model where a buyer is starting to incrementally kind of step into the market right here, and then it's a quick little undercut followed by a hammer. That hammer leads to then upside followed by a higher low, and then a move back higher and a nice recovery into the close. That doesn't really matter with what my overall view and what my the time frames that I was kind of analyzing Netflix on. So Netflix was a really, really, really Nice trade because we're at the previous swing high, right? There's obviously very, very, very dominant distributive type of patterns here when you look at this from like a macro standpoint. We got a really nice gap down followed by the market kind of announcing all those buybacks and then kind of moves higher like with ease. And then we led into a new high. However, that new high was right beneath the previous swing high, right? So this is the previous swing high, right? We'll mark that as like uh, red. And this was all the way back in 2021, right? So this is a very critical level. This is a very crazy type of like level that was happening here. And we started to get the preliminary distribution phase right over here, right here. This is technically now like a failed breakout level, right? Which was actually a very critical spot for sellers to technically hold here. It was kind of just like this massive daily resistance where, okay, we pushed up above and then they pressed it back down on the earnings report. A lot of volume behind this candle, really gross looking candle, and then it bled, but it almost looked like it was bleeding, except really not making any sort of progress. The market gap down as a whole, it started to hold this gap progression area as a spot where, okay, the market's now catching a bid. This is seeing its move higher. However, when you look at this move higher, I talk about healthy trends all the time. These are not necessarily the most healthy trends, right? This was a really nice higher low. If you go into like the hourly, this was definitely something that made a lot of sense, and then it kind of continued its way higher. However, this is kind of continuing its way higher with ease, right? Right back into the swing high and now swiping the previous all-time high. So when we're looking at this, and you're looking at this level that is being failed, and you're also looking at the previous swing high level that is just it can't get a closure above on any sort of strength, right? That is going to be extremely, extremely, extremely critical, right? You're always going to want to look at like your 21, maybe even like your 9 EMA. And what this was doing was it was kind of just trying to break its way up, catch that breakout out of the flag, and I feel like everybody was just looking at this as some sort of daily bull flag, right? So when you're looking at this and you're like, oh my gosh, okay, like they're failing the initial day of the breakout, which is totally fine, right? I don't expect this really to be breaking out like that. It had a really nice, strong volume type of move through that range, and then what happened was they filled the overall like imbalance that was established here, which was right off of the open of a certain day. And then what they did was if you go into the daily, they were kind of trying to establish like some sort of support off of what looks to be the earnings candle high, right? So this was support for however many days, 1, 2, 3, basically like 2 trading days. I mean, I guess you could count this if it tested it like in pre-market. And then what happened was it was moving its way back higher, looking for the breakout, right? It looks good to the average eye. And then from there, what happens the next following day? This is where everybody's like, oh my gosh, okay, break, base, go. New all-time highs, right? But this is getting the preliminary distribution that's happening from over here, right? There was someone unloading. This is a scary looking candle, and then they're trying to base it, and they're failing it after testing into that earnings candle high, right? This is technically a failure right here as well, guys. I mean, you got to think people are looking at it that looks something like this. People were looking at it like on the hourly whenever they saw something that looks like this, right? And it just kept getting sold. There is a reason this is continuously being sold. There's a reason why we're getting lower highs from here into here into here, right? So whenever I see this, whenever I see the previous day high, whenever I go into the extended hours and I see what would be the swing high, meaning the pre-market session of Friday, the trading day high of Friday, the pre-market high of this morning, all within the general confluence of the same range, as well as the previous 2021 swing high sitting here, and I see this type of print that looks like this. then I'm shorting, right? I'm shorting either risking the opening print, which is the $700 psych, right? So if you want to take a short here, if you want to take a short on the 5 minute lower high, which is what I did, and then I sized into it once I got the confirmation a little bit more on it. So I actually took a little bit worse of an ad as it started to break down. If you go into the extended hours, you're going to be able to see how this was just a very, very simple lower volume, lower high. If you take off the extended hours, which I typically do like to do, the targets would probably be the bottom of the range, right? Just because we're getting a larger perspective of a failure. We do have an unleft bull gap over here. It's not very critical or important. We have a bull gap beneath us as well, right? But I think, this could either at least just go for another test of that earnings candle high. And if not, it's probably going to be a little bit lower and give up the earnings candle high because this is an aggressive fill. You guys always got to remember institutions, they like to trade passively. I always talk about this, right? I always emphasize how they want to trade passively. They want to get cheaper amounts for their shares, right? And then obviously sentiment is driven even further whenever you start, looking like you're breaking out into a new all-time high, and not that's just not the case, right? That's just not how it works. It's just not how big banks trade, which is our job to follow, right? So once we get the failure over the previous trading day high, as well as like the pre-market high, that's whenever I'm really looking for a nice fade, risking the opening print or the current trading day high. If you take a look at like the risk reward on this entry off the opening print or beneath it, maybe risk the opening print or the previous all-time high from over here. What you guys are looking at is a minimum of what would be probably a 2.5R. Let me go into the 15 and take a look. Um, Opening print being right here. You could risk it on the 15 if you'd like and buy a little bit more time, and then target into the bottom of the range. Um, with this not even having too crazy of a target, this could potentially come out to a 5R trade. So that's really, really, really nice. Just make sure you're not trading too far OTM because of expensive contracts. Those could definitely be a problem. Um, but this is just a really, really, really nice chart for a short opportunity, right? And you go over into tech, you take a look at tech. Um, I'll show you guys what I was saying right off of the open. Um, so this is what I was saying. So I was leading into the new week, guys, with just tech is in a really bad spot. I'm waiting for the 10 a.m. data to make moves. PanW super strong. So I wanted to get as close as what I could to the data just to kind of see what was going on, but it was just a very clean, clear type of gap down and grind to lower type of day. And you're looking at this, and Apple has a lot of weakness to it. All general tech has a lot of weakness to it. This is whenever I jump short on Netflix a little bit even more. I didn't really want to just give it out there because I've been talking about this setup so many times. Like if you go over here and you take a look at what I was saying about Netflix in the past, it was just really, 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 where is it? Yeah, Netflix is still just a failure. um, I would bet Netflix gets drilled soon. Hopefully not into the next week, but it's actually one of the cleanest shorts within the market, right? So I figured that the best risk to reward is on this name that had a little bit of relative strength, which doesn't necessarily matter right off of the open, just to find the failure, right? And then once we find and spot that failure, that's whenever you could start like looking at something like this and then like risking above this level. If you want to take it to the risk all the way above like the high, you can. Or if you identify this right off the bat, right? You're looking at a maximum amount pretty much here of $6 of risk with a reward of about $19, right? So that's a 3R trade. A 3R trade is fine, right? That's 3 wins, pays for a loss. So that was a Netflix trade. Very basic. I think people look for like way too much confirmation on stuff like this. Sometimes you just have to pull the trigger. I talk about new week, new tape. Sometimes the order flow could shift a little bit more aggressively right into a new week, especially a short week whenever it catches a lot of people off sides. And this was just simply put, sellers winning the battle up here off of this gap, right? It would look a little bit different if this was constructively basing, but none of these daily candle spreads show me enough result and enough effort to really have enough juice for the upside, right? There was a lot of assets that were kind of unloaded within the market over here, right? And you're climbing your way back higher based off of this disgustingly large volume footprint candle, that really nice signal that where a lot of the inventory was accumulated, right? So there isn't going to need there doesn't need to be an active bid that is chasing price and absorbing every single sell throughout this action, right? Because there was so much accumulated down here to the point where this can start running up effortlessly until we start getting into the upper ranges where all the distribution started in the first place, right? So that would be these gaps. If you go into the S&P, you can see the same general concept over here, right? The gaps were already filled over here, but then you had this one all the way stretching from the top, actually, the all-time high, and it pushed into it, started to find that rejection, and then it just couldn't hold up with it, right? So it's kind of just frying people on time. People aren't patient enough. And yeah, that's basically all it really is. So let's jump into the next tech short that I did have. I was considering opening up a lot of tech shorts today, but I really didn't want to just because the risk to reward wasn't the best within all of them. I was thinking about opening a few on Friday, like new positions, and just holding them full size into the new week. But I already had some runners. I already took some decent profits and realized a decent bit with like the Apple short from last week, and then I just had some runners on there. And then I was planning on looking for Nvidia again to start, or I'm sorry, not Nvidia, Netflix to start off the new week. Luckily, it didn't gap down, or else I would have had not so great of a day. But I have these calls on Netflix. I'm looking for probably like over 120% on them. If you take a look at the daily chart here, guys, I'm trading what looks to be more of like a I haven't even taken a scale yet. So I think I have a win in my hands where I'm going to be able to win on it, right? That's kind of just what I thought about it. But if you think about like where the entry was, where the stop is, and then target down into here, you're looking at like this is probably a little inaccurate because I'm doing it from the daily chart, but if I'm risking like the opening print, which is like basically just also the $700 psych, and then I'm targeting down into the lows of this range where this gap is. I mean, dude, we're looking at almost a 10R trade, right? I mean, call it a little bit higher of a stop. We're looking at like an 8R trade, right? So um, that is just really, 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 really nice. If you want to take it all the way into high a day, it's still a 7R trade. So really, really, really nice setup. I also did, like I said, take the ads a little bit lower and size up a little bit more just because I really had some nice confidence within this one. And then I would have just started risking now what looks to be like where the lower high was at. All right, so I could still take it right up into the opening print range, but it's still looking like a 6R trade, right? So long story short, just a really nice high risk to reward, bigger picture failure. Um, Identified the preliminary distribution happening leading into what would be the UT, which would be new price discovery failure. And that's whenever I'm looking for everyone to get smoked off of that, where there's going to be enough exit liquidity from like breakout traders from I don't know why it still happens, but it's just the nature of the markets, right? So Apple shorted this one last week as well, right off of this upper extreme distribution gap, right? So this is kind of what initiated the distribution from 231.50 all the way into 235-ish, right? And then we started to find the reversal, and I started to notice how this was a consolidation break, right? So whenever you're going from like a 5 or 6 day consolidation break into a failure afterwards with a shooting star in the daily, and then it claims back beneath into the range, this could be a monstrous trade to start targeting into the bottom of the range, first of all, right? So this is the breakout level on the daily where we technically got the successful gap up, and then the retest never based or nothing. What it just did was pushed us right beneath under it again. And then that's whenever you start getting this disgusting look within Apple right off of the open, breaks and bases right beneath the previous trading day low, which was Friday's trading day. And then from there, what I'm looking for is same general concept, guys, would be something like the bottom of this range, which is the first initial non-aggressive target. And then if I want to get aggressive with Apple, I would be looking for this thing to start recorrecting itself down into like these gaps down here, which it already actually did. And when you're looking at the risk reward on a short position like this, I mean, you think about like sizing in on a lower high up here, risking the high, uh, and then you get beneath that high, you get beneath this gap here, you go into your 15, you take a look at this, and you're like, oh my gosh, okay, like this 15 sliced right through that gap, it based it. Look at the 5, it's just kind of like getting lower highs off of it. That's a really, really, really nice trade, right? So like my entry was like right up here, risk was like above these highs, about $1.50 of risk here, guys, and a target which looks to be like down into here. I did scale some up here, right? So it's about a 5R, or I'm sorry, up here. So it's about a 3.5 to 4R. But whenever you're looking at like the runners reaching down into like these gaps down here, it's looking like a 10R. It's looking like a almost a 7R, right? So you always want to have very established criteria to be able to tell yourself, okay, what is going to give me a better win here, right? What's going to give me the best possible win here? What's a realistic target? One being down into here, right? Wiping out all of these days of support, especially if there's no support that's established through this absolutely terrible range where there was little to no really absorption kind of happening here. It was more and less just digestion on little to no sellers using any sort of relevant amount of ammo, I should say. Um, and once we started to identify that seller, that's whenever you start looking at this to be like a 5-6R trade. Not to mention, I mean, it's right in a gap. It's not like a random area, right? So, yeah, these type of setups catch a lot of people off guards, I must have to say. Um, so this was the entry actually on this one right over here. Um, where is it? Okay, yeah, so, oh my gosh. Give me one moment here, guys. Okay, so this was what I was looking at. I'm short Apple. Apple tape is definitely getting hit with something here. I want to see a knife beneath the gap level at 231.50. So as you guys can see, 232-ish was like I was already in. Execution and risk was the black at 232.33. And then the level that was needing to be lost to give up the gap to get beneath that gap was 231. 46, and then eventually I wanted to give up the opening print of the current day. That's whenever I would start looking, okay, this is moving from green to red. Now I'm looking to target the overnight gap that established the whole entire move higher in the overall consolidation break on the daily. And then I'll start targeting these series of lows down here or the gap that's sitting over here. Um, so at initially it was about a 4R. This is about a 4R trade right here. Um, like I said, it's kind of what the trade criteria looked like to begin with, and then I was able to actually add a little bit on the pops as well, and it was very, very easy, very mentally easy. And I saw some people have a position here, but I don't really know if they still have anything. I'm not too sure. So I sold a little bit too much than I would have liked to. The weeklies today ran about 500% from last week's, like trading this week's expiry from last week. Um, so let's go into my loss now, which was Roku. So Roku was one where it was holding up relatively strong throughout the whole entire day. I've been talking about this one to be a nice little long setup, and it still could be. I mean, charts just don't sometimes play out. That's just part of the game, right? It happens. It's just really important to identify the overall wider perspective of weakness within the market, and be able to play both short side as well as like a long side chart. Um, Looking at short side for the purposes of tech, and then hopefully we get a nice little rebound where growth starts to become that leader. It's not very probable because the market went more full risk off, as you guys can see if you go over into names like XLP. Really beautiful day with a lot of volume traded on XLP. Go over to something like Pepsi. Really, really nice volume to end off the week from last week. This kind of really goes to show how the market's transitioning into more risk off, with names like Nvidia being absolutely hammered. I talked about this in the scan, how you will see attention get caught into some of these sectors, right? So it's definitely something where I don't think Roku is the most favorable alongside trade. But what happened was we kind of got the undercut beneath the massive daily level retest, which was like the $66 level. What it did was it took out this previous higher low that was trying to be established for a break, retest, and go. It got beneath 66. It did sweep this massive high volume mother candle low, and then it started to find a really nice like recovery leading into the end of the week. That's whenever I took the higher low right off of what would be technically the breakdown failure. This would be the breakdown failure, like smaller time frame breakdown failure. So I started to add some size into this from right over here, 66.32, and it climbed all the way up almost into 68 towards the close. I went green 20%, and then I overnighted this September 20th expiry calls. And then it was kind of just consolidating off this level the whole entire day. I got some more ads after my position went a little bit red here. And then this is whenever it kind of just gave up with the general market. I didn't want to swing a losing position overnight. That's whenever you start looking to get bagged. That's whenever you get into really dangerous territory where it's like, dude, why are you even swinging this? You're swinging it based off of emotion. Just take the loss. I already hit with the short side trades. I have Apple. I have Netflix. Why would I try to ruin my week with like a 60, 50, 70% loss? I would rather just take the hit, reevaluate it a little bit later, and I can come back, guys. I lost 30% on this, like maybe like 32, with not even like the best ads, right? I didn't even catch the best ads over here or even on this day, right? So if I were to come back to this the next following week, later into this week, and I was able to hit this thing for 100%, I'm pretty sure a 100% gainer pays for a 30% loss plus more. Doesn't that make sense? That's why it's very, very important to stay with consistent sizing, with consistent risk, with a very planned, with a very concrete trade plan that you follow, right? So I was kind of just looking for this thing to maybe get some continuation today, although the expectations weren't necessarily super high. When you take a look at the daily chart, I mean, guys, this could be something that plays out from like the weekly. There's when you look at this, there's nothing really that's in the way of this being able to find a higher low and continue higher. It's just sometimes your timing is a little bit off, right? Or sometimes you don't buy enough time on those options. So it happens. It's not, if you lost on a chart that looks like this and you followed your plan and you took uh, a understandable amount of a loss, that's just part of the game, man. So with that being said, that was just the three trades that I had to manage for the day. Those trades were decent. They weren't anything that was like super genius. I mean, the market definitely stopped so many people out today. Off of a 1 day move, minus 3% within Qs. I've been expecting a pullback ever since the fill of this gap. It just took a little bit longer than expected, so I wasn't extremely prepared for this move down. I don't think anybody was. However, if you're not getting toasted in a quick, sudden move like that, there's really nothing to really look down on. It's not that bad. It's not that big of a deal. There was some beautiful fade opportunities within semis today. One being like TSM right beneath the 165 spot. However, risk to reward got a little rough down here. Um, you go over into something like Nvidia, right? It starts losing what would be like previous lower highs turning into potential higher lows. Gross earnings candle, gross gap down. Not a lot of volume traded, but yeah, I mean, this is seller dominant, right? Very seller dominant. So you go take a look at some of these other charts and you're like, these don't necessarily look so great. Like if you're not long on a lot of these charts from previous times, then there ain't no way that you could be super bullish or looking to fill on any of these alongside like none of these have looked good for a very long time. The best looking long within the overall market, in my opinion, would have probably end up being Amazon or something like AMD on this recovery higher from this previous leg that we did get that lasted a very short amount of time, right? So, um, yeah, definitely some really nice long opportunities within some other sectors today. However, tech, not the greatest, right? You're going over into something like J&J, really nice long opportunity. Um, take it right over this swing high that's sitting right here, 165.71. Given the fact that tech is also kind of getting absolutely smoked. Um, take a look at something like Pepsi, and you're like, oh yeah, that makes a lot of sense as to why this was catching a crazy bid today. You catch an intraday move on something like this, guys, it could set up your whole entire week, right? So I do teach this. I've already made videos on this, so if you don't know what I'm talking about, make sure you go take a look at those. Um, like I said, it's not guaranteed for. Oh, okay. C was a nice little short. I couldn't catch this one, unfortunately, because I was too focused and dialed in on like some tech shorts. This was a really nice trade where, okay, we got a slight little gap down and then we started to fail the gap wick level. So you go into the 15, really nice loss of this level, and then a retest right back into it. If you wanted to catch a little bit of leeway, really nice fill on the on some puts here, maybe with some time, you could try this spot. You could try the break, however, it did happen pretty fast. So yeah, and then everything else kind of bled off, right? So any long side trade that unless it's consumers is just toast. So like I said, red today, you really shouldn't get too down on yourself. I feel like a red day on a day like today is a little bit more, way more understandable than like a bunch of red days on times where we had some chop, um, or where the short side was a little bit more predictable, I would say, on days like this, on this whole NVIDIA type of distro that happened over here. So, yep,